Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading. Welcome to our trading room recording on Tuesday, the 20th of April, 2021. Let's have a quick look at today's economic calendar, folks. Employment change in the UK came in at minus 73,000, was expected minus 150,000. So clearly good news. We had a good move on the pound yesterday, guys. I don't know if that move was preempting this figure or whether we're going to get another move in the pound today, guys. Good news for me because I was long the pound euro last week and it went off in the wrong direction, and I was a bit concerned whether I was going to be able to get out of it or not. Now, when I get something that kind of goes badly in the wrong direction, I tend to chicken out when it comes back up. In other words, I either get out for a zero or I get out for a very small loss because I'm not brave enough to hang on to it, guys. So out of that one, as I say, a very small loss on a very small trade, but nonetheless, they all add up. And what we need to do is make sure that we're winning more often than we're losing, but also make sure that when you lose, that you contain it, guys. Defense is the best form of attack. If you were playing a football game, you can win 1-0, guys. You don't need to score 5 or 6 goals to win a football game, so long as you don't let the opposition score. Now, obviously, you know, we do get it wrong on a regular basis in trading, but the important thing is to limit your downside and then accumulate your upside, guys. Okay, this one will be shorter than yesterday. As you know, I've been started putting this out free on YouTube. Well, sections of it anyway, free on YouTube. And just the marketing idea, guys. I'll do it for a period of time, see how people respond, and I will adjust it. Maybe put a little summary out as we were doing. I think last year we did a few weeks of putting a summary out. We'll see how it goes. If you leave comments or follow or, you know, give me a thumbs up, it will encourage me. If you don't, then I'll probably give up on it. But we'll still be doing it for subscribers to the website. Okay, guys, just moving on. New Zealand inflation rate expected 1.4%. Have to keep an eye on that because I'm long Aussie New Zealand. I love trading the Aussie New Zealand. I'm not sure how successful I am at it, but I do like trading it because it kind of runs in a flat, you know, horizontally over, you know, so many months that way, so many months that way, and then you trade it with trend that way and that way. I'm not sure. We'll look at the chart in a minute. I'm not sure if we're at the top or not, guys. If we're at the top, then this move that we've had recently will be the start of the move down, but we'll have to see how that goes. Okay, and then a quick look for tomorrow. Core inflation rate in the UK. Obviously, if it comes in hot, be good for the pound. If it comes in cold, in other words, the numbers below there, that'll be bad for the pound. And then Canada, I'm quite positive with the CAD this year, the Aussie and the New Zealand. I'm pretty flat on the dollar. And the pound's moved up quite a bit, so maybe a little bit flat in the pound this year. And the euros have got a bit of catching up to do, but I think it'll be later on as they come out of lockdown that we'll probably see a bit of a boost on the euro, guys. And then just while we're on that, Swiss, yen, safe havens, guys. When things look bad, you'll see a boost to them. When things are looking good, you'll see them dropping off. And if you can get that right, then there's, you know, you can trade those with confidence. BOC, interest rate decision and inflation tomorrow. So we'll see some movement on the CAD tomorrow, I imagine. Now, they'll probably not move that, but if there's any upward movement in there, they will probably come out and say, right, we've noticed that, this is what we're going to do about it. Now, they'll not do anything tomorrow. But as you know, the market reacts ahead of time. So if the BOC come out and say inflation is getting a little bit hot, because you can see already it's at 2.3%, which is over. I'm not entirely sure what Canada's target rate is. I know the US is 2%. Most developed nations or developed economies are kind of focused on 2% because that's good organic growth, and not getting too hot, not running too cold, Goldilocks. So, if it comes in any higher than that, they may well say, listen, we're going to start to taper, or we may think about putting interest rates up, 6 months down the line, guys, and that will move the CAD. So we'll have to see what happens there. Over to the news stories, guys. By the way, you can read these for yourselves. I don't go into detail on each of them. I flip the stories that are of interest to me, where I think we can see opportunities, or stories that reinforce news, ideas that we're already running with. And we flip them, I flip them 24 hours a day, guys, near enough, except when I'm asleep, obviously. But I even lie in bed at night flipping stories. So we run through them every morning. Just saying this for the new guys, folks. Run through them every morning. But you can look at them yourself. You can read them yourself. Get yourself on the Flipboard. If you're not already on it, either sign up the Flipboard, or you can go into Google and look up Logic FX Trading Flipboard, or you can go over to the website, which is probably the easiest because there's a direct link. There's the direct link. Read the magazine and it'll bring you over to where we are. Okay, folks. So let's get on with it. Where did we finish yesterday? Usually a day ago. Dollar hovers near 1 month low amid subdued US debt yields. Yep, we were there yesterday. 3 stocks to avoid this week. I'll not read that. Let's have a quick look at it, guys. Motley Fool's good for getting ideas, guys, but remember, you've got to do your own research as well. Do your own technical research, do your own fundamental research before you decide to commit your money. Delta Airlines, Norwegian Cruise Lines, and Carnival. Haven't read it, but the reason why they'll be talking about it is, hold on. No, I did say yesterday, stay away and go Coinbase, guys. I'm already in it, but as soon as I can get out of it, I'm getting out of it. And why is that? Because at the moment it's 68 billion, or when they wrote this, it was 68 billion market capitalization, Coinbase. The Nasdaq itself's 19 billion. It's been around for 50 years, guys. And other banks and other exchanges will start to sell cryptocurrencies, and therefore, it's emotion that's pushed this up, guys. It's not fundamentals. It's way too high. And in case you didn't watch yesterday, even the CEO of Coinbase came out on the day of its release and said, when it was over 100 billion, by the way, and said, listen, this is a 5 to 10 billion stock. I have no idea why it's so high. So it's a long, long way down to go, guys, as people realize that it's way overvalued. American Airlines, Travelzoo, and I'll concede that it's a dangerous name to put on the list. Stimulus checks. The rub is that there's still plenty of international travel restrictions in place. The UK, even though the UK's opened up, it has a list of 40 countries that you can't travel to, guys. So, what they're basically saying here is there's a lot of things that people piled into with the, the reopening trades, as they were called. And the world isn't reopened yet, guys. So you could see these dropping off, and then maybe a few months down the line, up they come again as the rest of the world hopefully gets vaccinated and we start to see the tail end of this pandemic. At the moment, there's a major issue in India because they're vaccinating like crazy, and there's a new variant which, it's been detected in the UK now. Hopefully that new variant does not undo all the hard work that's been done up to now. But that's what we need to take into consideration. That's why they've put that up, guys. 2 REITs that could double in the recovery. Have a look at that. Stop trying to get rich quick and upgrade your investment strategy instead. I read this article. Yet again, it's Motley Fool. I flip a lot of Motley Fool articles, guys, because they give you some good information for free. Most of the rest will let you see 5 or 6 articles a month, and then they block you. So that's why I use Motley Fool so much. So, good advice here. Plan based around when you'll need your money. Realize that a stock, what a stock really is. Learn how to create those fair value estimates. That's going into the fundamentals of a company, guys. Diversify your holdings appropriately, of course, so that if one sector goes down, the other ones don't let you down as well, guys. You're trying to avoid everything going down at once. And the limiting factor of that is that when you do find one that is going up, the other ones might not be. So you're always looking for percentages, guys. Review and repeat. Okay. Bank of America Q1 2020 earnings upside potential still strong. Now, I was in Bank of America, then I got out of it. But it's since gone up like that, guys. And anything goes like that, I don't buy. I wait for a correction. Cathie Wood's ARK Invest only owns 4 Dow stocks, and they aren't what you think. Ukrainian Parliament passes bill that criminalizes people who don't reveal crypto holdings. Regulation Bitcoin news. The only reason I'm putting that is because, yet again, it's the governments are getting interested in Bitcoin, guys. Are getting interested in crypto. They're going to start to regulate it. I don't think that's going to be particularly good for the crypto market. From the whole idea of it being decentralized and out there and free. No, governments will eventually regulate it, guys, and it will not be transparent at all. Oil prices to be between $60 and $75 a year from now. Yep, I agree with that, and that's why I flipped it, just to remind us of that. Phone giant Deutsche Telekom invest in Cilo's crypto network. So, yet again, big boys are getting into crypto. This is the Toyota unveils first Beyond Zero electric SUV in Shanghai. So I watched the little video, and the journalist or the interviewer asked him what Beyond Zero meant. So I thought they were going to be not just carbon neutral, but they were actually going to take carbon out of the system. That's not what it is. What it means is more choice than just zero carbon emissions. So they're doing hydrogen powered cars, electric powered cars, and probably hybrids as well. So I think that's what they're talking about. How the pandemic made lumber America's hottest commodity. We talked about this yesterday, guys, but I found this little video on it, and it's actually really, really pleased. You've got to disable your ad blocker, obviously, see it, but it's a really good video, and well done NASA for flying on Mars. And it explains how we were talking about transient or temporary inflation yesterday and how it comes about. And we used commodities as an example, well, chips as an example, and then we talked about lumber. And this explains how the lumber prices went up. But it is temporary, guys. And this is the point that the Fed's making, is that yes, as the economy gets up and going again, there are going to be shortages and bottlenecks which will force prices of certain commodities or materials up, and that will come out in inflation, but it's not the whole of the economy overheating, guys, which is the reason why the Fed are saying we're not going to do anything until we see sustained figures above 2%. Financial Planner says crypto rise shows a weakening dollar, with 40% of all US dollars ever printed in the past 12 months. Now, if you go back a month or so ago, I was calling the dollar short. I said we get a pullback and then it will drop. But then when I had a look around the world, I said, well, what's the option? What currency's better, particularly since the US economy is booming? Remember, the dollar does a smile, folks. It's high when the US economy is good. It's high when the rest of the world's bad. In other words, it's safe haven. And it's only low when the US economy is doing badly. You know, that's a general sort of thing you can take for the dollar. So what we then said was, well, we'll at least run flat and maybe up in a shallow diagonal, which is what I'm trading at the minute. But as the rest of the world gets going, then this might kick in the fact that there's so many dollars around, and it might start to drop it again. So we will keep an eye on that, and we'll look at the chart in a minute, guys. We will keep an eye on that, but I don't think it's going to happen anytime soon. At least I hope not, because I'm long on a few things in the dollar. NASDAQ Dubai to list Middle East first Bitcoin fund. So this is just adding to the fact that Coinbase aren't the only people trading Bitcoin. IBM quarterly sales growth highest in over 2 years on cloud strength. Three infrastructure, that's right. ETFs to capture trillions in spending. Remember that the Biden government's trying to push through at the moment it's 2.25. It was 3. We'll see what comes out in the end, but they are going to spend a lot of money over the next, I think it's 8 years, guys, on infrastructure. The argument at the minute is about what's infrastructure and what's not infrastructure. Infrastructure for most people is, you know, your roads, your bridges, your rail links, the internet nowadays, telephone links, etc. But Biden's trying to bring in other things that wouldn't normally be in that. I'm not getting involved in the politics of it, but what I'm saying is there is going to be a lot of construction in the US, and these are ETFs that these guys are talking about. Now, I don't actually see the ETFs. CFRA head. Usually they're highlighted. Anyway, they're not highlighted, but nonetheless, guys, is there something we're missing here? Oh, here we go. iShares Global Infrastructure, EFT, Global X US Infrastructure Development, ETF. Did a bit of tunneling in the days, guys, down in Lesotho. Lesotho Highlands Water Project back in 1990. Tunnel, it was on a TBM, tunnel boring machine. FlexShares Stocks Global Broad Infrastructure Index Fund. And for anyone that's new, I'm don't like to say retired, because I'm certainly not retired, but my profession was mining engineer, and I worked in South African gold mines and had a little sojourn into tunneling when I was still studying for my manager's certificate. Okay, that'll do for Flipboard for the day, folks. I did say it was going to be, oh, hold on, there's more. Oh my goodness, here we go, 3 more. Pound has best day in a month. And by the way, the NASDAQ was off yesterday, guys. It was a horrible day yesterday. NASDAQ to launch options trading for Coinbase Global. And these 20 affordable European companies may see earnings surge. This might be worth a look, guys. At the moment, you've got to look at the charts, guys, on the individual stocks and do your research. But these are good starting points, as I say. Let's see, are they going to give us anything? No, they're not. You've got to subscribe and sign in. Sometimes they're free, sometimes they want you to pay. But unfortunately, I can't get into that one, guys. But sometimes what you can do is take that headline and put it into Google and just see if anybody has, copied it and printed it somewhere else that you can get free access to. So just something like that. That's Barnes, so we can't get in there. This is on a different thing, but I don't know. That's Flipboard where we just came from. That's Flipboard as well. Let's see if we can get in via here. No, they're not going to let us have it. This must just be a... Can't remember the name of it. Okay. What next? Oh, charts. Right. Let's get off the stocks. Get into currencies and the stock markets. Just to get a view of what's going on in the macroeconomic world, guys. Dow Jones didn't really move much yesterday. S&P pulled off a little bit. If you're not in it, that's great. If you are in it, then you don't like to see it pulling back. Probably a better way of describing it, guys. But I would fully expect something like that. It's not nice when you get these, because it means you're, if you have a portfolio that it does that before coming back up again, and for a week or two, it's not nice viewing. Nasdaq. Now, what I said recently was that given that we had a zigzag there, that we may well get a flat here. I'm hoping it's a flat, because that drawdown yesterday, which is fully expected, guys. I mean, I've been drawing this for quite a while in here. Well, a week or so. I've been saying we'll get a correction here. But that drew my account down yesterday. Everything went down yesterday. It was horrible. So it may well stay in here for another, another while. Hopefully it doesn't drop any lower, but eventually it will move up, guys. So don't be panicking. Nikkei, same thing. It's in a flat correction. That's the sort of thing that I was looking for the Nasdaq. Let's just copy that and move it across, guys. It's a little bit more developed, you see. So rather than just scribbling there, if you copy that and that's the sort of thing that I'm trying to draw when I scribble those lines on there, guys. But I do believe that eventually it'll break out. You can even, so don't be surprised. It's not going to match up exactly, guys, but don't be surprised if it stays in here for a while. But, 2-3 weeks down the line, it could happen sooner, but I think 2 or 3 weeks down the line, things will start moving along again. UK, big pullback yesterday in the UK. But yet again, it's what we were looking for. Don't be surprised if you get something like that. There's one there. It's kind of a little 3 there as well. We just draw it like that because most often that's how things move, guys. They don't always move like that, but most often they do. Now, there's a little flat there that dropped before it went. Those are horrible, guys, because when you get those, you get the feeling that, oh my goodness, my analysis that it's going to go long is incorrect, and you panic and you get out down here somewhere, and the next thing, 2 weeks later, it's way up there, but you've missed it. So you need to be, you need to have confidence in your analysis, folks. And obviously, you know, there are times if you got out there as it broke down through, because you don't necessarily know that it's going to come back up again. But if you get out there as it breaks down through, then as it's coming up again, you can get back in with confidence. But yet again, possibly you would have chickened out there again and still missed it. But this is the reason that I take my profits when they come on, guys, because the markets always move like that. And every now and again, you'll get something like that, and then it'll come down. And then eventually you have a trend. And then, you know, people come along and they go, hey, the trend's up. You know, if you get the in down there and up there, you'd have made 365 pips. And it's all BS, guys. It's all BS. Forget about pips. It's all about making money, guys. If you hit your target, whether it's a technical target or what I do now, which is a financial target, I'm taking 5%. If you could always move it to 10% if you wanted. But what I find with that is that because of the way things move, often you'll hit 5%, you don't take it. Next thing you know, you're in the red again. And then you don't know, was that the top? And sometimes you end up something like this. And by the time it gets back up again to zero, wherever you got in, you're going, I'm exhausted with this. It took me 2 months to get back here. I'm taking the zero. And you end up, you're in something for 2 months and you don't make any money out of it. Yes, there are times where something comes up, hits 5%, drops, goes up to 10, comes back down, and eventually over weeks and months over that period of time, it will be up there. But do you really need the stress? Do you need the stress of, you know, my account was up $500 yesterday and now I'm down $1,000? Do you really need that? Okay. UK. Dropping back down. Wouldn't be surprised if we saw something like that before it goes long. French. Same thing. Sometimes these are a little bit exaggerated because I'm just scribbling them, guys. But, you know, wouldn't be surprised if you got something like that before it moves up. Same thing with the German. Pull back. Now, that's not a great prediction. I'm not pretending that's a great prediction. When I see an impulse, I say to you, guys, wait for a correction. If you get a correction, buy it in because that's what the trend is. Don't buy in there because the chances are you'll get a drawdown. Don't buy in there because the chances are you'll get a draw in. Don't buy in there. Why? Because you're going to draw down, sorry. And then you've got to look at the whole thing and say, well, is the drawdown going to be that size or is it going to be that size? You know, look at that one there. And that's a pretty big drawdown, guys. So that will then depend on your read of what's happening here. China. Started to come up, guys. I think we're okay with China. I don't think it's gone down there anymore. It started to come up. It's a shallow one, but it's a bit of an ending diagonal. Could drop down here from here, but then I think it'll go long. Even if it doesn't drop there, it'll go long from there. Aussie. Nice pull down the Aussie, what we were looking for. It's pointing in that direction at the minute, so don't jump into it. Wait for it. If you're going to trade it, I'll just re-emphasize, I don't trade these indexes because I'm terrible at it. I get them wrong, and I lose money when I trade them. So I went over the last 3 years of the account, or 2 years, 2.5 years, and I noticed that every time I trade an index, that not every time, but on average, I lost money. So I stopped doing it, guys. It's come down into this level here. I don't trade, support, etc., but I'm aware of it. It's come into there. Hopefully that'll stall it out. And if it starts coming back up here, then, probably the next move's there. And of course, it could put a flat in here. But trend is up, guys. The Russell, It's running flat. Yes, there's a head and shoulders, but the trend is up. Is that the top and it's all downhill from here? There's no sign of that, guys, in the American economy. So don't be trading that as a head and shoulders short. Can it go short? It can do whatever it wants, guys. It can do whatever it wants, but I trade with the trend. So when things go against the trend, I allow them to run, and when they start to go back in the trend, I trade them. The only time you'll get that wrong is where there's a change in trend, particularly with a a currency. Because currencies, if you look at most currencies over a period of 5 years, you'll find that you'll get a lot of that going on, guys, or a lot of flat. So there's long periods where it's that's your trend, and then there's long periods where that's your trend. But that's on a daily time scale, guys. We're not talking about a 1 hour time scale. On a 1 hour time scale, if it's done that, wait for the correction, trade that. Wait for the correction, trade that. So why don't you trade it down? Because you don't know that it's necessarily going to go down. What you're saying is, it's come up. I've made profit. I'm going to take my profit. I'm not hanging on any longer because the chances are you're going to get a correction. So when the correction comes, we don't know if it's going to be that and it goes, or whether it's going to be like that before it goes, or whether it's going to push up first before it goes. What we do know, it is going to correct at some point. So at some point, you take your money, you wait for it to do its business, and then off it goes again. And that way you'll get it right far more often than you'll get it wrong, guys. If you chase the direction all the time, then you're always going to be chasing your tail. VIX up slightly today. The Dow Jones, or DXY, the dollar index, pushed on down. I'm looking for it to start coming back up here, guys. Now, I wouldn't jump in there and trade it long. I'm already in it, guys, but I'm not getting in because it's there. I got in here somewhere, and I've gone through this drawdown. If I wasn't in it, I would wait for the move up. I'd wait for some sort of, little pullback. And then from there, because that's your sign that it's starting to go long, guys. If you jump in there, just as if you'd have jumped in there, this could continue to fall. I don't think it's going to do that, but it could do that. And then you're going to be in a whole world of pain if it drops to there, as I will, from there to there. But I'm hoping this starts to come up. If it starts coming up, look for signs. The bond yield starting to go up again. Even a few basis points will pull that back up. Euro, USD. So obviously, because I'm looking for DXY to go short, I'm looking for this to drop. But yet again, don't trade it short from there because it could continue to go up. Wait for it to drop. Maybe break your trend line there. Give you some sort of setup, and then off we go. Pound USD. This has surprised me, guys, because everyone was doom and gloom about the pound back here 2 weeks ago, and I've been pretty bullish about the pound for the last couple of years, guys. But the doom and gloom, it had come up so high, I thought, well, maybe they're right this time. And as you can see, no, they weren't. So I haven't taken advantage of that. If the dollar turns, then this will turn as well with it. But I'm not necessarily expecting it to go away down here, guys, because I'm not expecting the dollar to do that. I'm just expecting back to DXY. All we're expecting, get out of that, get out to 4 hours. All we're expecting is the dollar to move in here. So it can move up and move down, it'll move up, it'll move down. Maybe it goes a little bit higher, but then eventually it'll it will do that. And somewhere down the line, 2-3 months down the line, I think the dollar will probably come a little bit lower until the Fed, that's as the rest of the world gets going again because of the amount of money that's been printed. And then as the Fed starts to print money, or sorry, not print money, starts to taper, starts to pull back, starts to top the interest rate hikes, as you see inflation coming in, then the dollar will come back up again. Maybe it stays in this channel, by the way. Maybe we're looking at something like that, and then that's the start of the drop, which then could drop out of there. But that's way down the line, guys. We're not forecasting that yet. So I'm still long on the dollar, but long within this flat correction. And if you watch every day, you'll find the day where I go, hey, guys, I've changed my mind. We're now short. Pound, Aussie, same thing, guys. We've been talking about this running flat or slightly down. And if you took that DXY, copied it and flipped it, it's not going to exactly match up, guys, but it'll not be too far away. Copy that. Where are we? Aussie. Now remember, it's inverse. So we got to flip it upside down. There we go. And get it to line up. So as I said, it's not exact, because the Aussie isn't even part of DXY, but you can see the trend's the same. Here with the Aussie dropping, there we had the dollar going up. Here we've got the Aussie coming up, the Aussie dollar coming up, Aussie US dollar coming up, and there you have it as well. And then you've got DXY dropping, there it drops it. So if you understand what's happening in DXY, you can understand what's happening in these. Okay. So there you go. Now, given that I'm not expecting that dollar to continue to drop, remembering that could be wrong, I expect this will come back down. Maybe it comes back down to there, and maybe it ends up running flat in there rather than up to the top there where I thought it might go. And of course, if that's the case, this could push up a little bit more before it goes, but I don't see it getting to there. And of course, it could be completely wrong, guys. I'm not jumping into that short yet. I'm waiting for the sign to say, hey, that's going to come down to there. New Zealand, same argument. No need to go into it, guys. Same thing. Looking for that maybe to drop back down into there. CAD, it's going to run flat, and the way it's moving at the minute, it's not worth trading. US Swedish krona looks almost identical yet again to DXY. Look at it. So if the dollar pushes up into there, then there's your trade. There's your trade. The yen. Now, I am long in this, and I'm getting battered at the minute, guys, but hopefully it's going to start to come back up again. Heading towards here. I don't know if I'll still be in it by the time it gets there, but I'm looking for something like that. China, I don't trade this, guys, but as you can see there, I was actually, this is when there were problems a week or so ago. We were talking about the Chinese economy, and they were stopping, curtailing loans. As the government were curtailing loans, and I just thought, well, that's not going to be good for the Chinese economy. So we'll see a bit of weakness, and also it's got pretty, the yuan's got pretty high, and China doesn't want it there, and they're, the Chinese are suspected of manipulating their currency. So if they want it lower for exports, obviously, then, and we're looking for the dollar to go up. That's why I drew that. But I don't know that it's going to do that. But certainly it could do that, guys. Yet again, wait to see the evidence that it's happening. Don't jump in there, because if I'm wrong on the dollar, then this will keep going down. US Swiss, same thing. I'm long on this and getting battered. It came a little deeper than I expected it to. When we got that, I said it'll come back down into the air of the fourth wave. It came down into here, and I thought, okay, off we go. Got involved there and watched it for the last week continue to drop. Hopefully that's the turn there, although there's nothing to say it is, because it moved up there, and then turned. So it certainly could turn again, but I'm hoping that that's the start. If it breaks out of there, gives me a setup, then I'll be saying to you guys, hey, that looks like it's going long. I think that's what it'll do, but at the moment there's not enough to get into that. Gold. As I said yesterday, gold's in this long down trend. I did say that it possibly could get up to the top of the channel, but I certainly wouldn't be trying to trade it. When we start to see inflation kicking in is possibly when and you see the dollar, taking its next leg down in 2 or 3 months' time. If that's when it happens, then maybe you start to see a bit of upside to gold. And silver will be the same, guys. I'm not saying silver will drop to there. I'm saying if it did drop to there, I would buy SLV. Bitcoin. I was in it yesterday. I got out of it. I get into it again last night, and I'm now down a couple of percent. What I said about Bitcoin was that, listen, when it dipped here, I bought it, and then it chickened out, and eventually it did that. And when it dipped here, I bought it, and then it chickened out, and then it did that. I bought it Sunday night, and on Monday afternoon, I sold it again for a $2 loss or something like that. So I've bought it again, and now I'm down about $10 on it. And I'm hoping that it's not, the start of something like that. And to be honest, when I analysed it a while back, I said, if it did something like that, I'd be interested in buying it. In other words, if it got down to there. So I've no idea what I'm doing buying it there. And that's the truth. But that's your emotions for you guys. The smart money would be if it dropped down to there. If it gave, listen, that's potentially an ending diagonal. If it's an ending diagonal, then often what you'll get is a 50% retracement of the previous leg up. Now, I wouldn't say 50% retracement of all of that, and I'm not saying it's definitely an ending diagonal. All I'm saying is that I'm aware that it's there, and therefore, ordinarily, I wouldn't get involved when you see something like that. There's so many choices, guys. When you see something that's a warning sign, stay away from it. So if it is an ending diagonal, I would say it was on that move there. So 50% would be there. If it was an ending diagonal on the whole move, then 50% is very close to where I said, where I drew that, guys. Now, I'll not still be in it by the time it gets down to 50%, because if it goes much lower, I'll chicken out again. But if it were to get down to 50% retracement, it would definitely be an opportunity, guys. If then. And if you're in it, I'm not saying it's going to do that. I'm saying if it does that, then it would be a good buying opportunity, guys. Okay, oil. I've said from my way down here it was going to keep going up. There's the arrow. And then when it got to here, I said, well, it'll either run flat or it'll push further up. It's not coming into here again, guys, for a long time. So there's your trend. It's either flat or long. So how do you trade it? Listen, I don't trade it because it costs too much money to trade it. And what happens is when there's a bit of volatility, the spread opens and you can be sitting there with a stop loss. The price is there. The price drops. Say you're shorting it. And this was happened to me a while back. And I get stopped out and the price never got anywhere near it. What happened was the volatility went up, the spread widened, and I just got caught in it. And I missed a really, really nice trade and lost money into the bargain. Just trying to find out where it was. It was here somewhere. May 2019, I think it was around there. Yeah, because it was before there. It was here. It had dropped, pulled back, and here I shorted it and I had a stop loss sitting there somewhere. Remember, I'm 4 hours here, so that's quite a distance. And, you know, I woke up the next day, stopped out and looked at the chart and went, didn't get anywhere near my stop loss. And then price did that. And I was furious because that's a lot of money in oil terms, folks. You know, if you've a short trade on oil there, you've made a lot of money. Or a lot of percentage. I prefer to talk in percentages, guys. So that's the reason I don't trade oil. But what I'm saying to you is I don't see it dropping anytime soon. It's either flat or long. So just getting back to it to finish what I was saying. I don't know if I managed to finish it. So anytime it drops, trade it up. Anytime it drops, trade it up. Why do you do it that way rather than, you know, waiting for it to get to the top and trade down? Because the trend's that way, so it will break out that way. It's not going to break out that way. So certainly you could try and trade it down from there, but if it decides that's the week it's going to go long, you've had it. So when it was down here, trade it long. When it gets to there, if it breaks out, fantastic. But if it gets to there and drops again in 2 or 3 weeks' time to bad again. Okay, let's move on. Trying to do this a little bit faster today, guys. It was 1 hour 45 yesterday, so that's far too long. We normally do about an hour, including, you know, going through our account and what trades we took and didn't take, and, you know, whether we're going to leave them on, close them, whatever we're going to do. EuroCAD. Yep, well, we said it was flat correction. It would break out and go long. And then maybe start to come off. Listen, it could start to come off from here if the dollar goes long, but we don't know that the dollar is going to go long. The reason for drawing that was basically a little zigzag, guys, and then off you come again. Euro was. I'm expecting Euro strength. Sorry, Aussie strength. But at the moment, the Euro seems to be picking its ears up a little bit. Probably based on the vaccination program that's going on and people expecting it to open up in the way that the United States and the UK has over the last month or so. The problem is that the Eurozone economy's pants compared to the US, guys. So just based on that, I can't see any big upside to the Euro, but I could be wrong. So for that reason, I'm not going to trade this in either direction. I don't like trading the Euro. It's just something personal, guys. It's just one of those currencies that if I'm going to trade anything, it's the dollar, you know, between the Euro and the dollar, because they go in opposite directions generally. So if the Euro's dropping, I'm busy trading the dollar long rather than the other way around. And if the Euro's going long, I'm busy trading the dollar short. Euro New Zealand, same argument that we just had about the Aussie. Euro yen, well, we've said it will break out. We were looking for a deeper drawdown. Remember, when we draw these, it doesn't mean that's going to happen. What we're saying is, if that happens, that would be a great place to trade it long, because we believe it's going to break out. And the arrow always indicates the direction that I'm suggesting you trade it. If I draw that and price is there, I'm saying don't buy it from there. But if it did that, then buy it from there. It's broken out already. There's probably more upside to it. But as I say, I'm looking at the dollar going long. If I'm wrong, then it'll turn out that this was the one to trade. But if I'm right, then this could possibly drop back into here as the dollar goes long. We'll have to see. I suspect I'm right, by the way, or I wouldn't be saying it. Euro Swiss now trading long from here. Oh yeah. Yeah. This was from Sunday's recording, guys. Yeah, I think it closed it yesterday. I took a lot of stuff off the table yesterday, guys. It was such a bad day. I thought to myself, you know what? I'll take a few $1,000 off the table, just in case with another couple of bad days. I don't want to be drawn down and down and down. So I'm limiting my downside risk. Now, obviously, by taking things off the table, you're also limiting your upside reward, but I can always buy back into things, guys. So that Euro Swiss was one of them. It was in the green. I just said, do you know what? Just take it off the table. And we'll look at what we did in a minute, guys. Pound CAD pushing up nicely. Thought it would go in that direction, but I haven't traded it, as I say, because I was a little bit wary of trying to trade the pound long after all the negative press it got coming down through here. Pound Aussie, kind of done the same thing. Maybe there's a little bit of a push back up, but I don't really see it getting much further up than that, because I'm also looking at the Aussie going long. So at the moment, we're just seeing Aussie's doing that, pound's doing that, and there's your difference. That's okay for trading ranges, guys. When something ranges, like the Aussie New Zealand, because they usually both move in the same direction. That's how you end up with a flat, what you'd call a flat correction, or just a flat range. But if you really want to catch impulses, then you're looking to trade something that's going long against something that's going short, and then there's your range then, rather than that being your range. I hope you can understand what I'm doing there. Anyone that did vectors in school will understand what I'm doing there, guys. Pound New Zealand. Well, it's the same as what we just said there. Maybe it pushes up to there. If it got to there, I'd take the profit. Pound CAD. I feel the same way about it. The CAD, the Aussie, the New Zealand. Sorry, this is Swiss. Different thing. Yeah, I'm looking to trade that up, guys. Pound Euro. This is the one that I got out of, guys, because I was chicken. And I did say yesterday I'd chicken out of this. And I got it back to within $6 of where I got in, and I chickened out. Now, it has pulled back today, but I imagine it's going to push on up, but particularly if the dollar does that turn. If the dollar in the next day or two starts to come back up, then the euro will drop and this will push up, guys. Pound yen, another one that I think will go up. That prediction that I'd written there was when we were here. Sorry, when we were up here again. I basically said, listen, if this drops back down into here, then try and trade it long. And that's what we're getting. I'm not in. I don't think I'm in this one. And I'm not going to jump into it now, guys. I would need to get some more confirmation that the pound's going to continue to go up, and it would have to have some sort of setup for me to want to get into it. But it could go beyond there, by the way. Aussie yen, yep, expecting it to go long. It's broken out there. So anyone that got in here or even here or even along, along that drawdown, you'd be doing okay. Now, what's it going to do next? I suspect it'll at least get to there and maybe go on. And the reason why I go to there is because sometimes it turn out to be flat corrections, guys. So it comes up, gets to there, and then it comes off again. So I usually take my profit if I get to there. If I was trading technically, if I was looking for technical targets. Most of the time, I'm not really looking for a technical target, but I will say to people, hey, listen, the technical target be there, but I would usually be out of it long before it gets to the technical target. With the strategy I'm using at the moment. And we changed the strategy because for the first 2 years we were running the account. We were trading a different strategy and we lost money. Not a great deal, but we were down 7% the first year and just over 8% the second year. And I thought, well, we're wasting our time here. So we changed the strategy. And since then, touch wood, we've been making money, guys. If you ignore yesterday, we're up about 9% year on year. And 7% since the start of the year. Closed. Those are closed positions, guys. Open position. We drew down a bit of percent yesterday, maybe a wee bit more. Okay, Aussie New Zealand. This is the one that I'm a little bit concerned about, guys, because I'm looking for that to at least get back up to there. But when we go back out to the daily, as you know, or you probably know, this ranges. So when it gets up to the top, I usually trade it down, and when it gets down to the bottom, I usually try and trade it long. I always feel that I'm successful at it, but when you go back and you look at the statistics, it's a real hit and miss. I get it wrong as many times as I get it right, but I think that's more to do with my trading psychology than anything else, because I generally get the analysis correct, but then when I go to trade it, I've chickened out so many times that you miss the impulse. So when we were coming up here, when we got to here, we said we'd get a drawdown, and then thought, well, maybe it'll come back up and give us a little double top there. That's why as we got that drawdown, remember this is the daily chart, I was looking for it to break out, maybe give us a double top, and then say to myself, okay, I'm staying out of it until we determine what's going to happen next. Now, there is a possibility that if you look at how this pair moves, just look at that, for example, and yet again, try and, make it fit. See that? That worries me. That worries me. Because the last time it came up, it dropped, pulled back up, zigzag, and then off it went again. Dropped, pulled back up, bit of a zigzag. Is it about to drop? We'll know possibly within 24 hours, because if the news that's coming out about the New Zealand tonight, well, for me it's tonight, and this takes off in that direction, then I'm out of here, because I think that that then the trend has turned and it's going to start to do that. But we don't know that yet, guys. If the news coming out of New Zealand isn't good, then you could see it break out there, trade it to there, and then we'll start to look to trade it back down, possibly. But we'll go and we'll look at the fundamentals between the two. It's often a technical trade, guys, because fundamentally there isn't often that much between the two. Maybe a 25 basis points in interest rate or something like that. Aussie Swiss, looking for it to go long. Yep, I would say that's probably going to push up. Of course, it could pull down a little bit before it goes, but I'd look for that to go up. Aussie CAD, this is one of the ones I don't know about, guys, because I think both of them are long. And it could turn out it runs like this. But as I said yesterday, or I say all the time basically, but I need to repeat myself because not everybody listens to every one, and not everybody is new, has been around a long time. If you're going to end up with a flat, which I suspect this is going to be, then you need to determine your range. Is that the top and that's the bottom? Well, but at the moment we don't know. It's coming up, but it could stall there and then drop, and it turns out that that's your range. So at the moment, I don't want to mess around with it. But if it came up to there, remember, if it came to there, I would trade it back down. When it was there, I should have traded it up. I didn't, but I should have. Okay. Swiss yen. Got out of it, guys. Yet again, got deep in the red with it, and then chickened out as it came back into the zero. Made a very small amount of money. It's the second time in as many months that I've got heavily into it as it's come up, and then chickened out of the whole thing as it went against me. I still think there's downside to it. It's just the way it moves. 1 minute you're in the green, next minute you're way deep in the red, and then it comes back to the green again, and you get tired of it and you go, oh, I'm getting out. And then you get out, and 3 days later it's down there somewhere. So yet again, it's about trading psychology, not about the analysis, guys. This pair's running flat. And there's certainly, technically, there's certainly an argument for it dropping down into there, guys. CAD Swiss, another one that dropped yesterday that I'm long in. I hope I'm right. There's a possibility, and we did say it when it was running flat here, that you would get a zigzag, bit more downside before it comes up. I suspect that's what's going on. So I'm quite deep drawn down in that. Not from a pips point of view, but from a point of view, I've got 3 trades on it now. And, I'm hoping that it starts to come up, guys. If you're not in it, I would wait for it to come up a bit and then maybe give you a little pullback. Trying to think, something like that. Maybe not as big as that, but you know what I mean, where you get a push up and then it pulls back, and then that's your opportunity to get into it. Or here, if you were trying to short this and it was there, I wouldn't jump in short there. There's where you go short. Even here, if you were here and you said that this was going to go, and I have traded this pretty successfully, by the way, guys. If this was dropping like this, and you were wanting to trade this long, well, there's the place to get into it. And yes, it came back again, so you need to have your stop loss, well out of the way. And so long as you believe in your analysis, then it'll come in. And then there's a drop and up and up and up. And to be fair, because I take 5 to 10%, I was out of it by the time we got the impulse. But I did predict the impulse. And if you go over to here, I haven't been doing very many charts recently, guys. That's why I keep talking about the same one for anyone that's watched recently. If you go back to here and then run this, well, there was the prediction. There's the 2 arrows. I thought initially it will come up to the top of the channel, it will drop, and then it will go. That's why we get 2 arrows. But anyway, fantastic. And there was the target. All worked out lovely, but I didn't manage to trade it. I traded it through here successfully. And then somewhere along here, I got out for a profit, obviously, but then I missed the impulse. But then that's because of the trading strategy and trading. If you were trying to trade impulses, then you would have still been in that. CAD yen. The same argument. I think it's going to go long. It's come down into the 4th wave here, if that's what it is. That's an impulse. That's a correction. Probably a 4th wave. That's your top. It's dropped back into the area of the 4th wave. Looking for a double top, guys, so I'm looking to trade it up to there. New Zealand yen, same thing. I've been looking to trade it up 1, 2, 3, 4, 5, 6 days, and I've probably been doing that for weeks, guys. So it's gone now. If you're in from there, which is where you should have been in, you should be doing well now. Either take your profit or put your stop loss to 0 at least. And if it got to there, I'd probably take my profit. Listen, it'll probably move on through there, but we don't know. So if I was in profit and it got to maybe a triple top, because the last thing you want is, you've sat in it for 2 or 3 weeks. You've built up, if you're going to trade at technical targets, you've maybe built up 20% or more. You don't take a profit. Next thing you know, it changes direction. Or else it comes back down. It turns out it's running flat. And that's gone. Take your money, guys. New Zealand CAD. This along with the Aussie CAD's the one that I don't know. It's more or less the same. It's going to run flat, but does it get to the top before it runs flat? Yep. What I'm saying is it's going to run like that. That's what we mean when we say it's going to run flat. But is that the range, or is it going to stall there and drop, and then that becomes the range? That's the thing we don't know. Should have got in down there, but what I would do next is I'd wait for it to show us where it's going to turn, and when it turns, then start to trade it short. New Zealand Swiss. Same thing, impulse, pullback, impulse. Looking for it to come back up into there, guys. Okay, that's it for today so far as YouTube's concerned. Obviously, subscribers, hang on in there, and we will have a look at the account.